Chasers! Today's episode comes from a real-life case just before the 30th of June and is about how to make an urgent contribution to your SMSF with no money. And as this is an accounting and tax topic, as a member of CPA Australia and a registered tax agent, I'm obliged to give you this general advice disclaimer before we begin.
The advice provided is general advice only, as in preparing it, we did not take into account your investment objectives, financial situation or particular needs. Before making an investment decision on the basis of this advice, you should consider how appropriate the advice is to your particular investment needs and objectives. You should also consider the tax implications on your financial situation. Chris Becks, CPA member number 805103 and registered tax agent number 629433015, is a director of CBEX Business Solutions for Good and is authorized to provide accounting and tax advice.
Now that is done, let's dive into this episode. Generally, a contribution to a self-managed superannuation fund, or SMSF, is tax deductible when it has been received by the SMSF before the 30th of June and is acknowledged in writing by the fund trustees that they have received a notice of intent from the payer that they wish to claim a contribution as a tax deduction. Contributions can be paid in cash, cheque, personal, business or bank, money order, or by electronic transfer. However, the timing of when the contributions have been received by the SMSF is critical to the tax deductibility. A contribution is made when the cash is received by the SMSF, when the money order, bank or other cheques are received by the SMSF unless they have been dishonoured, when the funds are credited to the SMSF's account via the electronic transfer. What should be noted is that when a contribution is being paid by way of a cheque, the contribution is deemed to be made when the contribution is received by the trustees of the fund, provided the intention is to present the cheque for payment in a timely manner. However, where a member pays a contribution by way of electronic transfer, the contribution is counted as being made when the contribution hits the SMSF's bank account. So, when a member of an SMSF writes a cheque on the 30th of June and it is not deposited in the SMSF's bank account until the 1st of July, the contribution will be treated as having been made in June, provided the cheque is in the hands of the trustees before midnight on the 30th of June. In the case of electronic transfers, there is a danger of missing out on the tax deduction if the contributions are transferred on the 30th of June but don't make it to the SMSF's account until after 1st of July. Some housekeeping for SMSFs then. If you have an SMSF that uses cheques, you should consider following these steps. Number 1, determine when the cheque was dated and when the money hit this SMSF's bank account. Remember, the contribution can only be counted in the initial year if the intention is to present the cheque for payment in a timely manner. Now, there's no indication given of how many days would be considered timely, but our view is less than 5 business days. Number 2, to ensure that their contribution was received and counted in the initial year, a simple written and dated acknowledgement of receipt of the contribution should be prepared to confirm when the trustees of the SMSF receive the contribution. And number 3, in the SMSF's accounts, the contribution needs to be shown as an unpresented cheque, not a sundry creditor. So how do you make an urgent contribution to your SMSF with no money? Now, a possible solution to solving the problem of not having a chequebook or cash deposits and electronic transfers being received by the SMSF before the 30th of June at year end is the use of a promissory note. A promissory note is a financial instrument that contains a written promise by one party, the note's issuer or payer, to pay another party, the note's payee, a definite sum of money either on demand or at a future date. In this case, the issuer is the person or entity that wants to make and claim the tax deduction for the superannuation contribution, and the payee is the SMSF. As long as the promissory note has been correctly prepared and signed, a contribution for tax purposes is made when the promissory note is received and payment is demanded promptly by the SMSF and the note is honoured by the payer. We recommend that the contribution be made by supplying the SMSF with a promissory note dated no later than the 30th of June and honoured in the first week of July. Therefore, in summary, number 1, make sure the contribution being made is in the bank account of the SMSF before the 30th of June, unless it is a cheque, and treat it as an unpresented cheque. Number 2, prepare a simple written and dated acknowledgement of receipt of the contribution to confirm when the SMSF trustees receive the contribution. Number 3, the use of a promissory note to get a tax deduction for superannuation contributions at the 30th of June is possible if correctly executed, demanded and paid promptly. That's our tip on how to make urgent superannuation contributions to an SMSF with no money to secure a tax deduction at the death knell on the 30th of June. However, we don't recommend making superannuation contributions at the last minute. They should always be done a week before the 30th of June to allow sufficient time for clearing and appearing in your SMSF's bank account. Thank you for listening. I'm Chris Becks, and I look forward to presenting our next episode to you.
If you enjoyed this episode and you'd like to help support the Chasers channel, we would love you to share it with your business friends and colleagues, post about it on social media, or leave a rating and review. To catch all the latest from CBEX Business Solutions for Good, follow us on Facebook at facebook.com/CBEX, Instagram at CBEX, and on the internet at cbex.com. Thanks again, and we'll be sharing new info with you on our next episode.